Good morning, everyone, and welcome back to this new appointment with the morning briefing. Let's start right away. Here we are. Let's do a recap a little bit of which happened yesterday. Thank you. Sorry, I was saying. Let's do a recap of what happened yesterday. In short, a day on the roller coaster, if we can say so, with, in short, a morning that had started, in short, fluctuating, in short, a little bit of a range. Then there was a bullish breakout that brought prices exactly where we had indicated in the area of 18.3, where obviously, as we expected, sellers reappeared. Who pushed, in short, the price downward, in short, with the continuous flow of news related to tariffs, in short, to this trade war, in short, which is in full swing. So utmost, even today, utmost attention, in short. Even yesterday, we witnessed very, very violent swings, very high volatility, in short. So a fairly complex scenario. Always be careful, utmost caution in these circumstances. And these days, in short, we are witnessing an epochal change. In short, essentially the end of globalism, with scenarios that are all coming and going. That we still don't have, in short, we are navigating by sight because the variables are such that it is difficult to make a more accurate prediction. Having done this brief overview for yesterday, the situation remains the same. Yesterday, I repeat, in the afternoon, the market rebounded, going to make a test precisely of the area we expected. It broke 17.3. Let's say 70,100 to 7,300, and in short, it continued to fall, reaching the lows. Yes, yes. In short, last night around 16. In short, on RD, on SD, on SD2, and at 16.8, 16.8, and then 16.690, 790. So, in short, the situation is really quite complex. From an operational point of view for the day, what are we always expecting? This very high volatility. Do you see it in the European markets? They just opened with a spike of about 900 points, which brought the price from SD1 up to RD0. For this reason, regarding the Nasdaq, we are now working again above the BC3 levels, above this level, which they are currently retesting from above. A new upward push could start, perhaps with a recovery of this area. Here, probably the area between 17.6 and 17.7 could definitely be a recovery and landing area if this movement is confirmed. Conversely, on the downside, we obviously need to monitor this area here between SD1 and SD2, which seems to be the one that should hold, including this BC3 level that has formed this morning. From the Asian market close, so we monitored these levels on a broader scale. The situation seems to me, zooming out the chart, new decline flag, I probably expect a continuation unless there is intervention. Alternative scenarios with statements, new releases, new agreements that could slightly overturn this scenario that seems, in short, now clear to everyone and evident to all. A lot is happening with the bunds as well, even though we don't go into detail because we don't provide levels for the bunds. However, the situation there is also absolutely complex, both for the European and American ones. Last night, there was a significant hit on the American 10-year bonds, probably also a consequence of the auction held yesterday, which was somewhat disappointing for the Europeans, as it is reported. We will see some developments tonight. There are the minutes for the form. We will see some meat on the bones. We will see what the developments might be. We need to be open to these directional changes resulting from some release, from a statement, from announcements of thawing or tightening of these rates. We will see what the developments will be. Let's move to Maudis. In short, the situation is more or less no. In short, similar, obviously. Secondino. Here you go. Similar situation again with I'm in short. The levels to monitor. Here it is. In short, we are almost there. Just this one. So this area between RD0, RD1, in short, RD0, RD1. This is the one to monitor for potential upward attacks on the 1D max area and the VIX. Downward, obviously, in short, we are going to monitor precisely this area of the VIX. In short, because in short, this one here seems in short already done. In short, yeah, the next target seems to be this area. I hope this area here in short can hold. In short, because obviously a break of this area here opens up scenarios. Then in short, we will see during the day. If it is the case, perhaps to provide some extra levels if needed. In short, if these levels were to be broken, because more or less, in short, we are on the minimum levels, even weekly. In short, I haven't plotted those weekly levels, but we are here more or less, even with the weekly minimum ranges. So maximum attention to the upside. I repeat, in short, this is the area I will monitor. In short, RD1, certainly for potential bullish attacks. At the moment, this seems a recovery spike. We'll see if they find, in short, the strength to react, or if we will witness, in short, another dead cat bounce only to see, in short, a new debacle in the afternoon. Let's move on to the other indices. The other American futures, starting with the Dow Jones. Here it comes. Here it is. It's the Dow Jones. In short, a similar situation. In short, the levels to monitor. I repeat, in my opinion, the gap they left between Friday and Monday. This gap, which then in short was also closed. But they are still in short those important levels, those volume gaps, those gaps that are created and then maybe filled. But in short, they are definitely those areas that act as obstacles, as we have seen here as well. This first spike was precisely stopped in this area. Here, therefore, a recovery of this area could certainly lead prices towards the area of the highs, to a test precisely of the area of the highs of yesterday. Or in short, we must be ready for any scenario. In short, therefore, a break, obviously, of these levels here. In short, of the 1D mix area, when the minimum is certainly in short concerning, because it could trigger a launch, but a break of this triple bottom recorded here that had given the first, this in short recovery that was then completely retraced. Essentially, it held up again because Santa Nota held up again. Let's see if, in short, not to reattach to make it hold. We will see the developments. Let's move on to the Russell. Here it is, and delve deeper into its offerings. Here comes the Russell. Here it is, narrowing down a little to see where we are. Here it is. Exactly here. Similarly to the Dow Jones. Here too, the area to recover is this gap, because re-entering this gap could quickly push prices upwards, in my opinion, precisely due to a lack of volumes that were created, even though they were later filled in this area. Here, as we can see, in short, from all this movement, it is precisely this that could lead to perhaps an attack on this area. An upward push could lead to a recovery of the max levels recorded yesterday and Monday, and obviously to the downside. Let's keep in mind these lows recorded last night, whose break could obviously lead to more upward pushes. We are working again within the BC3 levels, so at the moment, a bit of recovery as partial compensation for the nighttime decline, which was not excessive, although it was substantial. And substantial. In short, it happened, but I repeat, not in a ruinous manner as it might have happened. There was definitely a break, in short, to test new lows that have currently held. In short, these areas have held, which then represent the lows recorded on Monday at the opening. In short. Perfect. Let's move on to new oil. Here it is, which continues. In short, oil is also going down. Last night, in short, it made a beautiful double bottom here between the lows recorded yesterday and those of last night. Of this morning, in short, for us Europeans, there was a nice double bottom, a nice pattern. So a 1, 2, 3, 4 at the Rotonda as PV. This, in short, the upward nature could comfortably be with the head of this area, then perhaps an attack for a recovery. If the markets were to recover, obviously, in short, because by now oil is traveling hand in hand, a little bit with all this dynamic related to tariffs. So, in short, we monitor together, in short, all the other assets, precisely to have an overall view of what we are doing. So we monitor this area. Then, with these two double levels of VIX, which then corresponds to being a bit higher up, there's the HV2 level. Today, therefore, this is definitely the area to monitor for potential bullish recoveries that could also bring prices into the RD2 area easily, which then seems to me and consumes the base, the top of the first level to pass. Obviously, this corresponds exactly to this area here indicated initially. So these two BC3 levels could provide an upward push. Below, of course, we monitor the double bottom that has formed in the VIX level area following the low. So let's monitor it, because a break could indeed certainly lead to further bearish movements. We also look at, of course, gold as it arrives. Here it is. This is a daily chart. In short, we witnessed this nice decline, in short, which went to test the previous highs. Now the market, in short, already started again yesterday with the nice candlestick. In short, it has recovered a bit from the one from last Friday. Now, in short, it has broken the body of this quad from Friday to Monday. Excuse me. And we have re-entered, in short, this area of this shadow of this area that we had outlined as a potential retracement. In short, it went a bit beyond. Maybe I could have extended it a little. But anyway, in short, we have re-entered. So it's also likely for a retest, first of all, at the first level to pass now on the daily. And this here, in short, of these highs here, having passed these, obviously we can assume another attack on the highs recorded last week. Let's also take a look at SPX and its current market analysis. Here it is. Here, SPX is this. It's a 4-hour chart, in short. It resumed that descent. It even went beyond the target of the second wave, which has now become, in short, that area of resistance that withstood, in short, this rebound attempt. Rejected. So, in short, obviously the level to monitor is the downside of the lows recorded on Monday. On the upside, let's keep this range as an area to monitor closely. We see that already. Yesterday, the volatility tells us that something is decreasing. Probably here we might witness other wide movements because we are talking about many points between the minimum and maximum of this area. So a little bit of retracement can happen. Obviously, then a breakout on one side or the other could lead to movements. In short, the wide and directional, because indeed, the scenario we are experiencing here is this one. Perfect. There are no other data, but as I forgot as a setting, obviously for the new indicator, in short, I reiterate and show it just because maybe I didn't do it. An indicator that follows a little bit the VIX, in short, transformed and adapted to the asset on which we are going to load it. The setting needs to be entered here. Here it is. Here you will obviously enter the levels for this entire week. I will provide these levels. In short, the levels of the VIX string, in short, for free. Then from next week. In short, they will always return. Only on Patreon for members. Premium SAR, so taking the maximum SAR and minimum range values of the VIX string. Inserting them here, setting this configuration, which at the moment, in short, I believe is good because it allows us to look at the chart from 5 minutes up to an hour back. In short, with a smoothing of 5, it slightly adjusts this line for us because otherwise it would be too, in short, off track. In short, I don't like them. In short, having these lines on the chart like this, I mean, and in short, it gives us some indication. In short, on how it might be or how the market might go, obviously in the European session. And in short, it tends not to generate, in short, good flows. In short, the line in signal processing precisely due to the absence of, in short, the dynamism of the VIX, in short, quoted at the CB. So in short, they are still essentially closed. So this is what it doesn't give us. In short, good input indications. The morning, however, then during the afternoon, at the opening of the American markets. Certainly, in short, the situation improves significantly. Perfect. Having said that, if you have questions, obviously, regarding the new indicator, you can ask me in the chat. As always, I invite you to leave a like on the video and follow me on social media. We'll catch up later in the chat. Thank you all for your attention.